It feels like every time you blink in the crypto world, something shifts. And right now, something pretty interesting is happening with Ethereum scaling. Get this, Starknet. It's apparently just jumped to become the #1 ZK rollup by total value locked, actually leapfrogging ZKsync. That feels, well, pretty major, doesn't it? What do you think's behind that?
Oh, absolutely. It's definitely a noteworthy development. And you're right to ask why. ZKsync had held that top spot for quite a while in the ZK space. Starknet surge. Could be several things, really. Maybe recent tech upgrades making it more appealing, or, perhaps some key dApps launching or migrating over. It definitely shows things are still very much in flux.
Okay, yeah, let's dig into this then. Today, we're going to do a deep dive based on some recent reporting about this exact progress Starknet's been making. Starknet as an Ethereum Layer 2 platform, we really want to get our heads around what this stage 1 decentralization thing actually means. Like, in practical terms, why is it important? And, where does Starknet actually sit now compared to all the other L2s out there? The goal here is really to give you a clear picture of this specific development and why it might matter.
Yeah, and that stage 1 decentralization concept is really central to understanding where these networks are maturity-wise. It stems from that framework Vitalik Buterin outlined, back in 2022.
Yeah.
He gives us a way to sort of measure how far along these scaling solutions are on their path to being fully, autonomous and secure.
Right. So the report says Starknet hit stage 1. Okay, but what does that really mean on the ground? They use phrases like limited oversight, even training wheels. What does that actually involve? What mechanisms are we talking about?
Training wheels is actually a pretty good analogy, I think. Stage 1 means they've significantly cut down the reliance on, a central team. But it's not totally gone yet. To get here, Starknet put things in place like a security council, and also mechanisms specifically designed to try and prevent censorship. So, for example, that security council. They might have the power to, say, pause the network if there's a huge bug found. It's kind of a safety switch. But, and this is key, they can't just go in and change transaction history or something like that.
Okay, so there's a council for emergencies, maybe. But the core engine, the thing proving the transaction's valid, those validity proofs, that's still running automatically, based on code, on smart contracts.
Precisely. That's the crucial part. And the real strength, arguably. Because even with that potential for emergency intervention, the everyday security, the validity of every single transaction, relies on that fully working validity proof system.
Yeah.
And those proofs are governed by immutable smart contracts, meaning the rules are locked in, no single party can just change them. That's a huge step up in trust compared to, say, just relying on an operator's promise.
Now, Starknet is a ZK rollup. We hear ZK and optimistic all the time with layer 2s. Maybe for folks who are a bit newer to this, can you give us the quick breakdown? How are ZK rollups different from optimistic ones?
Sure, happy to. The fundamental difference really boils down to how they prove transactions are valid when they bundle them up for Ethereum. ZK rollups, like Starknet, use what are called validity proofs. Basically, when they send a batch of transactions to the main chain, Ethereum, they also send a kind of cryptographic receipt, a mathematical proof that shows those transactions were executed correctly. Ethereum doesn't have to redo the work, it just checks the proof. The math confirms it.
Right, okay. It's like showing your homework with the answer, and the proof verifies the work was done right.
Got it. So what's the optimistic way then? Optimistic rollups. Well, the name gives it away a bit. They start by optimistically assuming transactions are valid. It's more of an innocent until proven guilty model. They post the batch, and there's a challenge period. If someone thinks there's a fishy transaction in that batch, they can submit a flawed proof. That triggers a process where that specific transaction gets checked on the main chain to see if it was, in fact, fraudulent.
Okay. So ZK proactively proves correctness up front, optimistic assumes correctness, and relies on challenges to catch errors later. And the report really flags this point. Starknet is currently the only Layer 2 ZK rollup that's reached this stage 1 level of decentralization. That sounds like a pretty big deal within the ZK category, doesn't it?
It is, yeah. It's a significant differentiator right now. It kind of signals that Starknet is pushing ahead, showing it's possible to get to this stage of decentralization while using those strong ZK-proof security guarantees. Definitely puts them in a unique position among ZK solutions.
So let's zoom out a bit then. Starknet's top ZK rollup by value locked. What kind of numbers are we talking about? Where does it actually fit in the whole Layer 2 ecosystem?
Okay, so the latest figures put Starknet at around $629 million in total value locked, or TVL. And And like you said, that puts it just a nudge ahead of ZKsync, which is sitting around $610 million.
Oh.
So yeah, within that ZK-Rollup specific race, Starknet's currently leading by that metric.
And against all layer 2s, where does that $629 million put them?
Overall, Starknet ranks as the 5th largest layer 2 network by TVL. It's important context, though, that the top 4 networks, think Arbitrum, Optimism, and the big one recently, Base. They're all based on optimistic rollup technology. And they've also reached stage 1 decentralization, but using their fraud-proof mechanisms.
Right. The report gives that Base example built by Coinbase, right?
Yeah.
Having something like $14.7 billion in TVL, that's like 33% of the whole L2 market. Starknet's share is listed near 1.4%. Wow, that really puts the current dominance of optimistic rollups into perspective.
It absolutely does.
Yeah.
It shows that while Starknet's achievement is significant, especially within the ZK field, the optimistic approach currently commands a much larger slice of the overall layer 2 pie in terms of, locked value and likely user activity. But again, that doesn't diminish the technical steps Starknet has taken. It's a different path, focusing on those validity proofs from the start.
And that total value across all layer 2s, $44.2 billion. The report mentioned it jumped recently, probably because Ether's price went up, but it's still down like 20% since the start of the year. What's the takeaway there?
Yeah, that really highlights how much the dollar value locked in these L2 ecosystems is still, heavily influenced by the price of ETH itself. We're seeing growth in usage, sure, but the headline TVL number will swing with the market. That year-to-date decrease could be broader market sentiment, maybe capital rotating elsewhere in crypto temporarily. It's complex.
Looking ahead then, Starknet's not just stopping at stage 1, right? What's the end goal? Stage 2?
Exactly. Stage 2 is the ultimate target on Ethereum for these rollups. It means reaching a state of full autonomy. The network is entirely governed by its community, no training wheels, no Security Council oversight needed for normal operations. And Starknet also has these interesting longer-term ambitions about possibly using their ZK tech on Bitcoin too, which is a whole other conversation.
The stage 2 sounds tough. The report notes only 3, and they specify small layer 2 platforms have actually gotten there so far. That really drives home how hard achieving that full decentralization is, especially at scale.
It really does. Vitalik's 3-stage framework is a helpful guide, but moving between stages is non-trivial. Stage 1 is a major hurdle cleared, showing commitment to decentralization. But stage 2, that involves solving really deep technical and, importantly, governance challenges.
Okay, so boiling it down, the main things for you, the listener, to take away are Starknet hitting stage 1 decentralization is a big step for them. It's put them ahead in the ZK-Rollup category by value locked right now. We talked about that core difference. ZK-Rollups proving things valid up front with math, optimistic rollups assuming validity and using fraud proofs later if needed. And crucially, while Starknet's made progress, stage 1 still means there's some level of oversight, those training wheels, as they aim for that stage 2 goal of full community control.
That's a great summary. It really paints a picture of the constant innovation happening. You've got these different philosophies, different technical approaches, all trying to solve Ethereum's scaling puzzle. Starknet's progress gives users and developers another strong option to consider.
So thinking about the future then, as these layer 2s like Starknet push further down this decentralization path, it makes you wonder, doesn't it? What impact will these fundamentally different security models, ZK's proactive proofs versus Optimistic's reactive ones, have on long-term adoption and, on the actual trust people place in these systems? And maybe even more fundamentally, what does fully autonomous and community-governed really look like in practice when a network is securing billions of dollars? Definitely something to keep watching.